Hi friends, this is Bank Nifty 1 hour chat being recorded on 2nd June 2023. In this video, we are going to analyze how Bank Nifty market may behave in the near future. In our previous video, in 1 hour chat, we have mentioned that this could be a market edge. Okay, and the reason is that we have multiple lines intersecting at the same point. Okay, and price making higher highs and higher lows. So that only gives us indication that this could be a market edge. Okay, however, we also suggested that to go long or short, it is advisable to wait and watch how price behaves like. So to jump into more clear analysis, let us make the same analysis in 5 minutes time frame. I mentioned that the time frame and the fractal dimension doesn't matter. Okay, it is independent of time frame. The analysis is still the same. Okay, so let us jump into 5 minutes analysis for the same chart, and then let us see how this could be meaning a market extreme. Okay, so to make things clear, let us bring forward this sort of length of market. This is a ideal length because we have some sort of good information to make some viable decisions. If you clearly observe, there are two important highs in this market. One this high, next this high. Okay, the reason I mentioned these highs is because these two highs are manipulated, okay, and heavily, and then now price is retracing back at these levels. So these two highs form a very important levels for our future analysis. Now the kind of manipulation that is done here is bull trap manipulation, and here it is bear trap manipulation. Now, to be able to catch the precise edge, we need to understand the price action clearly, draw lines, and then can assume conclusions before taking calculator risks. So as you can see, once price break over here, price tested the same line here and then has gone a higher high like this, above this high, closed above this high, making this point a solid structure, which means we can trust this bias. And look at the volatility of sellers here and buyers here. Though buyers volatility seems to be slow, they significantly raised the market and closed above this high, is only indicating that the buyers at this level are though looking weak but strong enough. Okay, again when price is falling back again at this point, we can draw an inward frequency line here, and then we can assume that we can see that price is also respecting the inward frequency and then creating inside candle, followed by whenever price is touching this line, this is creating a fractal bar. So this only gives an indication that these buyers have no potential to pick the market, and you see that buyers are picking the market very close to the inward frequency and not even letting the price to come to this level. So this is a possible chance that these buyers are now ready to pick up the market. Now this is the theory. Now we have to draw lines to confirm our theory. So to do that, we can draw some lines. I'm sure you must be stunned to weigh the logic we have picked up behind drawing these lines. Okay, so just observe carefully how we are drawing these lines. I did mention that these two are very important heights for us. So that's the reason I'm drawing a line like this. Okay, and then placing back at this point where market has created another edge. Okay, now see that the same line is catching beautiful edges along its uh, edge here. Okay, prices taking higher highs and higher lows, and then prices respecting this point exactly at the same point of inward frequency. Okay, so let me erase this line for making things simple. So this only indicates that this price action is now caught between these two lines. Okay, we can also draw a modified skip fitchbook in the higher flows, and to your surprise, you see that price is reacting at the same point where multiple lines are intersecting and then making higher highs and higher lows. So these sellers are, though falling very aggressively, are unable to close below this low. So all these multiple lines are indicating that this could be a market extreme. Okay, so there is a possibility that these buyers can pick up the market and then go higher highs. And if you also add the other layers of analysis such as relative strength index, you see that price is now making higher highs here, whereas price is making RSI is making lower low at this point. So this indicates that this is going to be a bullish continual divergence, higher high and lower low. Also, if you look at price between these two extremes, price is making higher high and RSI is making lower low. So we have double convergences of RSI with price here at this point. And in terms of RSI, we have confirmation. In terms of price action, in terms of line work, we have multiple lines intersecting at the same point and multiple theories intersecting at the same point, giving rise to a possibility of good long trade opportunity at this point. However, please note that no matter how good our analysis is, there is a possibility that price at times behaves very uh, uncertainly and then hit our stop loss points. So this is only for educational purpose that we are trying to explain here. The trade could go wrong irrespective of how good we are at analyzing the market. Okay, so if this is going to be a market extreme, this is the edge, then we can draw a pitchfork like this: A, B and C. Okay, or we can draw pitchfork like this: A, B and C, and then we can expect that the price will reach this upper end of this pitchfork, and it could also mean that price could reach this outer end of this pitchfork. So this is one possibility, guys, and let us see how trade unfolds further. And please, if you like my analysis, please do give a thumbs up, like, please do subscribe, and please comment about my analysis. That will help me to develop more such beautiful contents for all of us. Thank you so much. See you in another video. Bye bye.